Welcome to Quick Bite, your fast and friendly Florida insurance update.
Hello. This is Roshonda with the Isom Insurance Group here in the sunshine state of Florida with a brand new Quick Bite, your fast and informative insurance industry update. Today is Thursday, October 16th, 2025, and we're talking about one of the most misunderstood terms in auto insurance, excluded drivers. If you've ever looked at your policy and seen a line that says driver excluded and wondered, what does that even mean? Today's episode is for you because that one line can be the difference between being covered and being stuck with the $50,000 bill after an accident. We're breaking down what excluded drivers are, why insurers use them, real world examples of how they can save you money or cost you a fortune, and what you need to do to protect yourself. Let's get started. Let's get started with the basics. And on the screen, I do have a Yahoo Finance article on the screen. An excluded driver is someone you list on your auto policy as not covered to drive your vehicle. That means if that person drives your car even once, even for 5 minutes, and gets into an accident, your insurance will not pay. Why would anyone do this? Usually because that person is considered a high risk driver. Maybe they have a DUI, multiple accidents, too many tickets, or a suspended license. Including them on your policy could double or even triple your premium. Excluding them can drastically lower it. Here's a quick example. Adding a driver with a DUI can raise your premium by 40 to 60%. A driver with multiple at-fault accidents might add $1,500 to $2,000 per year to your premium. By excluding them, you might save hundreds or even thousands of dollars annually. But, and this is a big but, that savings comes with a risk. If that excluded driver gets behind the wheel of your car and causes an accident, your insurance company can deny the claim completely. You could be responsible for all the costs, repairs, injuries, lawsuits, everything. And there's no just this once exception. Excluded means excluded, period. And to delve into this a little bit more, usually insurance companies, anyone that is a licensed driver in your household needs to be listed on your policy. So that's really why you got to try to exclude them, because if it's the person may be in your household, like in a roommate situation, you got to list them, but you want to exclude them because your roommate, unless they're a relative or something that regularly drives your car, you don't want them rated on your policy. But because they're in your household, the insurance company wants them to be listed. You can list them and exclude them. Let's make this real with a few scenarios. Example 1, the grocery run gone wrong. Mark excludes his teenage son, Jake, because Jake already has a couple of speeding tickets. That decision saves Mark about $1,200 a year. One day, Jake borrows a car just to run to the store and rear ends another vehicle. Damage total $28,000. The insurance company denies the claim. Jake was excluded, so there's no coverage. Mark is now personally responsible for the full $28,000. Example 2, the borrowed car surprise. Tanya excludes her ex-boyfriend from her policy because of his DUI. Months later, he borrows her car without asking and causes $50,000 crash. Even though Tanya didn't give permission, the insurer denies coverage. He was excluded. The legal and financial mess still partially on Tanya. Example 3, when it works out. A couple excludes one spouse from a second vehicle because that spouse never drives it and has a poor record. Their premium drops by 35% and they avoid a big price hike. They follow the rules and everyone stays protected. The lesson, exclusions can work, but only if everyone sticks to the agreement. Now, let's talk about what can go wrong because this is where people get blindsided. Just this once driving. The number one mistake people assume one quick trip won't matter. It does. If that excluded person gets behind the wheel, the insurance company can and likely will deny coverage. Unauthorized use. Even if the excluded person drives without your permission, if they're in your household and have access to the vehicle, you could still be on the hook. And the reason being, again, because every licensed household person is supposed to be rated on your policy. Most insurance companies require it. So if you excluded that person because you say they never drive my car, even if they take the car without your permission, you could still, that claim can still be denied. Assuming other policies will cover it. Even if the excluded driver has their own policy, that doesn't mean their insurance will apply to your vehicle. It usually doesn't. State law differs. Not every state allows excluded driver provisions, and some limit them. For example, some states don't allow minors in the household to be excluded. Always check your state's rules. Documentation mistakes. Exclusions must be properly signed, documented, and added to the policy. If the paperwork is incomplete, the insurance company may not honor the exclusion or may still deny a claim. Back in the day, not so much now, but back in the day, even with digital signatures being allowed by companies, anytime there was a driver exclusion form, it still had to be wet signed, meaning with paper and ink and then scanned up. Now, not so much. A lot of insurance do allow the digital signature on those forms. But like I said, back in the day, it had to actually be wet signature. Here's the reality. Exclusions are legally binding. They're not suggestions. Once someone is excluded, they cannot drive that car, not even for emergencies. And I always bring that up to customers when they're saying they want to, maybe I'll look at excluding someone. I always say, realize, even if when you exclude them, if you have an emergency where that person is the only person that can drive you to the hospital, if they drive that car and get in an accident, that claim may not be covered. So with all this risk, why would anyone agree to an exclusion? One word: cost. Auto insurance premiums can skyrocket when a high risk driver is added. Here's what the data shows. A driver with a DUI increases premiums by an average of $1,600 per year. A driver with multiple accidents can add $2,300 or more. Even a new licensed team can increase costs by $1,800 to $3,000 annually. For many families, excluding that driver is the only way to keep their policy affordable. But this only makes sense if you're 100% sure that person will never drive your car. If there's any chance they might, the risk far outweighs the savings. It's like saving money by canceling your smoke detectors. Sure, you might save $20, but the downside is catastrophic. If you decide to exclude a driver, here's how to do it the right way. Talk to your agent first. Don't just check a box online. Understand exactly what the exclusion means. Document everything. Make sure the exclusion is signed, filed, and added to the policy, and keep a copy for your records. Set clear boundaries. If the excluded driver lives with you, sit them down and explain you cannot drive this car. Not once, not ever. Reevaluate over time. If their driving record improves, consider adding them back. Avoid gray areas. Emergencies are not exceptions. Excluded means excluded. And here's a tip. If someone is only temporarily a high risk, say they're a teenager or recently had a suspension, consider excluding them for now and revisiting it in a year. Policies can be changed. Let's wrap this up with a few key takeaways. An excluded driver is someone you've legally removed from your auto policy coverage. If that person drives your car, your insurance likely won't cover any damages. Exclusions can save you money, but they can also expose you to massive financial risks if misunderstood. Documentation, communication, and discipline are key. And if there's any chance the excluded person might drive, you're usually better off keeping them on the policy. Think of it like lending your credit card to someone you don't trust. If you wouldn't hand them the card, don't hand them the key. Now, I'd love to hear from you. If you found today's quick bite helpful, please like this video, share it with friends and neighbors, and drop a comment below with any topics you'll like me to cover in a future episode. And remember, a new quick bite drops Monday through Friday at 2 p.m. Eastern. The information shared in this video is for educational purposes only. It should not be taken as legal, tax, or specific insurance advice. Please consult with a licensed insurance professional about your unique situation. This is Roshonda with the Isom Insurance Group here in sunny Florida. Thank you so much for watching, and I'll see you next time. Stay safe out there. Bye.
Thank you for watching. Visit us at isominsurancegroup.com.